First of all, a very warm welcome and good afternoon to everyone who has taken the interest and the trouble to tune in to this webinar. I say afternoon because it is past 2 o'clock in Singapore, where I now live, and have a ringside seat, particularly on the Palm market and the Palm universe. I haven't spoken in public for the last 5 months. I think my last appearance was in Indonesia or China in November. And since then, I've been keeping quiet. My recent interview on Bloomberg was the first public utterance, and that brought me a lot of hate mail. So I'm not sure if I'm opening my mouth at the right time. As I usually do, let me give you a very brief background. I will speak briefly because today time is of essence and we are going to wrap up in 90 minutes what Kailash Singh normally stretches over 2 days at GLOBOIL. So we came here on the cusp of what I believe was the shortest bull market in history. The bull market started around after GLOBOIL last year, around October, and finished on the 13th or 14th of January. Very short bull market. And how did we get there? We got there on the basis of a drought, an El Nino drought in Southeast Asia. We got there on the basis of a massive switch in soybean acreage to corn acreage in the United States. We got in because of a drought in Europe and problems in rapeseed production. And we got in because of the biodiesel mandates, particularly the very strong mandate to be implemented by the government of Indonesia. And I have a lot of respect and a lot of time for the Indonesian government and what it is doing to encourage and support the oil palm industry in Indonesia. Hats off to them. So we came in on massive expectations, only to find that by mid-January, we saw a massive amount of selling in the market. And the selling was coming from the same country which also triggered the bull market, China. So just as it was the Dalian futures which first dragged the reluctant market into bullish territory, it was Chinese selling which broke the back of the bull market. Now, if you are a believer in conspiracy theories, then you will say that, oh yes, the Chinese in early January knew about the virus and that's why they started selling. But that is a matter of opinion. The fact is that the selling started around 13, 14 January. And then we ran into a whole week when Chinese markets were closed because of Chinese New Year. And so the selling came into the BMD. And we had, I think, that record day of limit down when prices in the BMD fell by 10%. So this is, I'm giving you a background to how we transited almost in the blink of an eyelid from a bull market into a bear market. And what I'm now going to do is to concentrate on the macro and climatic factors to start with, and then towards the end move to COVID and its repercussions. On the climate front, as I told you, we went into the bull market on the back of El Nino. But since then, there has been a dramatic improvement, particularly in the last 6 months, in the rainfall pattern in Southeast Asia. And we have had plentiful rainfall. And now with the benefit of high prices, we have also had very good fertilizer application. So by and large, the portents are for a very good recovery in palm oil production, particularly in the second half of 2020. In fact, in my opinion, the recovery has already started. We saw it in March. We are going to see it in April when the figures come out in the next week. And the recovery seems to be taking shape in a very, exactly the way that most of us would have expected it. In addition to that, in the United States, we are seeing once again acreage going back to soybeans from corn. Because of the China-US trade spat, we had seen US farmers abandon soybeans and plant corn in a big way. This time, it looks to me that a lot of the acreage that was lost to soybeans is coming back to soybeans. So we should be prepared for a very large US crop once again. And the planting weather so far, the good news is, has been very good, almost excellent. Secondly, we had some difficulties with regard to the drought in Europe last year, which seemed to continue this year. Particularly winter in Europe was very dry. Now, as you know, a dry winter has its repercussions in wheat, barley, corn, rapeseed, and sunseed production, not only in Europe, but mainly in Eastern Europe and what we call the former CIS, Russia and Ukraine. There again, the good news is that in the last 10 days, the rains have come back. Now, it doesn't mean the drought is over. What it means is that the situation for the time being has been saved. We need a lot more rain in the month of May, but at least in planting time, germination time, the rains have been good. So that means, and that you can see very much in the behavior of the futures in the Chicago Board of Trade, particularly wheat futures, which have actually fallen by about 60 to 70 cents in the last 2 weeks. That's mainly because the wheat crop in Russia, Ukraine, whole of Europe, France, and also in Australia seems to have been saved by timely rain. And if this rain continues or comes into good measure in the month of May, then we may look forward to another large sunseed crop. And definitely the rapeseed crop in Europe is going to be better than last year. Now, this rainfall has also shown its beneficial face in Australia in the last 2 weeks. So Australian wheat prospects, Australian prospects of rapeseed, canola seed have all improved dramatically. So almost all the bullish factors which propelled the last bull market of 2019, drought in Europe, drought in Australia, drought in Southeast Asia in the previous year, have all now dissipated. And we are coming into a season of recovery of palm oil production in Southeast Asia and relatively good crops in almost every other part of the world. Now, the story is not finished. And as they say, weather can always give you a surprise, a nasty surprise at the last time. But by and large, particularly with the use of genetically modified seeds all over the world, we have found that yields are very good. And if the minimum amount of rainfall comes in, then generally speaking, crops are good. So we are looking today or in the next 6 months at a large surplus of soybeans, much higher production than the previous year, probably higher production of rapeseed, definitely higher production of palm oil. So this is as far as the macro situation is concerned. Now, there is one other factor that we need to bear in mind, which was responsible for the bull market of last year. That was the China-US trade spat and swine flu in China. The swine flu meant that the demand for soybean meal relatively lessened in China. China started importing meat, Europe, USA, everywhere. And the trade spat meant that China was deliberately not buying US soybeans and only concentrating on importing soybeans from Brazil and Argentina, or making do without. This year, as you know, swine flu is now gone into the background, and the unforeseen consequence of the previous year, which was a drop in Chinese crush by between 10 to 12 million tons in terms of soybeans and rapeseed. Remember, the Chinese had a fight with the Canadians and they literally banned the import of canola seed, high oil-bearing seed. So, altogether, Chinese domestic production of vegetable oil fell last year by almost 2 to 2.5 million tons. And that gave an opportunity for the world's vegetable oil exporters to step in. And the biggest beneficiary of that was palm. The second beneficiary was sun oil. 500,000 tons of sun oil went into China. And you all know, those of you who handle soybean oil, that China was also a consistent importer of bean oil last year. In my opinion, from now on, Chinese imports of vegetable oil are going to shrink because their crush is coming up back to normal levels. That means between 10 and 12 million tons of extra crush, or 2.5 million tons to 3 million tons of extra domestic produced oil. This is something which the sun oil market has completely ignored. I mean, sun oil is on a journey to nowhere virtually in terms of its price premium. And I think many other markets have also not taken into account. Now, finally, I will touch upon the effects of the COVID virus and the economic slowdown in the whole world. Remember, this is a medical emergency which has become an economic emergency, not the other way around. So when your patient is unwell, when you have a medical emergency, what is the first consequence? Consumption is affected. You cannot have normal consumption. Forget about rising consumption. You cannot have normal consumption in a time where there is a serious illness, a pandemic right across the world. And then the economic consequences of that, which is a severe contraction of the economy. So these two factors have almost like a pincer-like movement destroyed demand. And this demand destruction, my fellow analysts have concentrated on the demand destruction for biodiesel and completely ignored the demand destruction on edible, which is why I think today's seminar is extremely timely, because all the other speakers who come after me are going to talk about the Indian consumption story and how all these problems have affected consumption in India. As I said in my Bloomberg interview the other day, the link between palm oil and vegetable oils and energy is now extremely strong. And if world consumption of transport fuels has reduced by 30%, 40% already, remember 50 million tons of veg oils go into biodiesel every year. So in round figure terms, 4 million tons of vegetable oil go into biodiesel every month. If that demand has been destroyed by 25%, and I am using a very conservative estimate, then in the months of Feb, March, April, May, we have lost in each month 1 million tons demand. So that 4 million tons of vegetable oil demand, mainly palm, but also soya, is gone, finished. I don't think this demand will be recovered in the second half of the year. In fact, in the second half of the year also, we will lose some demand. And overall, in the whole year, we may lose biodiesel demand in terms of veg oils by between 5 and 6 million tons. But 4 million tons is gone. And you can see it for yourselves. When was the last time you went to a gas filling station? So this demand destruction is what the market has already discounted. It is in the price and all the analysts are more or less agreed on it. I am not telling you anything new. What today's seminar is going to highlight to you is the demand destruction in the edible oil space, which my colleagues in Malaysia, Indonesia, etc. are not taking into account and are ignoring. They are only concentrating on the small problems in production, because in 6 districts of Sabah, there was a terrible lockdown, or somewhere else there was a disruption of logistics, etc. We are not seeing, to my mind, to my eyes, any tangible destruction of production capacity in the palm oil space. What we are seeing is a destruction of demand. My friend Govind Bhai, who I generally respect as India's most astute analyst and statistician, sent me some figures the other day which were mind-boggling. His estimate is that India's imports of vegetable oils together will shrink by 2 million tons in this oil year. 2 million tons is a huge amount of edible demand destruction. And it is happening right before our eyes. And unfortunately, all that is going to be palm oil based. So instead of India importing, as we were projecting, 9.5 million tons of palm oil during this oil year, we may import only 7.5 million tons. Now, this story is going to be repeated not on the same scale, but along the same lines in most of the developing world, because affordability is being destroyed, economic growth is being destroyed, and people will be very conscious of money that is spent for food and for necessities. So overall, I feel that the palm oil market has, at present price levels, adequately discounted demand destruction due to biodiesel, but has not yet come to terms with the demand destruction because of economic contraction. I think this is the story that will unfold later. We are at this level of price, around 2000 ringgits, just as we are coming out of the lean season. Usually we are at this level of price in a bear market during the high season when stocks are huge. Today we are coming out of what I would call skinny stock levels. Just 2 months ago, our stocks were 1.6 million tons in Malaysia, 1.7 million tons in Malaysia. We are now coming close to 1.8 and something. Perhaps by 10th, we will come to 1.9 million tons or thereabouts. We are going through this fasting month of Ramzan, which means that there is always a hiccup in production during this month. So I expect that the market has discounted what it knows up to now, and we have come to 2000 ringgits. But I am afraid what I called in my Bloomberg interview as cruel prices are yet to unfold post Ramzan, June, July onwards, when production really picks up in a big way. Now, I don't want to sound unduly pessimistic. I am not saying this because India is a consuming country and enjoys low prices. No, no one enjoys low prices. We all want growers, farmers to get remunerative prices. And for that reason, we have to be conscious of the fact that the economic reality this year is not going to be our friend. Money is very tight. Bankers are all down on their knees with all sorts of problems. In those situations, in what I call a very rough, challenging economic situation, I am afraid the price outlook is not favorable. I don't want to put out a price target, but I remind you that in bear markets, commodity prices tend to gravitate towards the cost of production. Ultimately, it is the cost of production that puts a floor underneath that price. So with those words, ladies and gentlemen, thank you very much for joining us. I hand you over once again to, it's not Narendra Modi, it is Atul Chaturvedi. And later on, when you have some questions, we'll be delighted to answer them. Thank you very much. Stay safe, stay healthy. Remember, the greatest asset for one is your health and your family. Thank you.